TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, feeling good, Billy Ray, and I believe we have Rich Anderson in the house. Rich, are you there?
You bet. Good morning, Larry. How are you?
Good morning. Thanks for taking a few minutes to talk to us, Rich, because this grain market is getting so much press about the bullish fundamentals that are going to be lasting for quite some time because we're not going to have a crop until the fall, and evidently Brazil's all sold out. Can you give us your 2 cents worth of what you see here? What I've posted here in the room for the folks is the daily chart of the soybean meal that's come down about 70 handles, which is $7,000, even though oil has gone straight up. Soybean oil has gone straight up. Now, this is pure protein. Is that correct?
Yes, and it's used to feed hogs and poultry. One of the things that might have had some influence on the weakness recently in the meal is, China, Minister of Agriculture had a note out where they're really trying to tamp down on this Asian swine flu. As you remember, back in 2019, Asian swine flu caused them to liquidate over half their hog herd in the country of China, which, to give a comparison, that's like liquidating all the hogs in the United States. I mean, it was a big deal. And they're just now getting back into their production, and of course they need the meal for feeding, but now they have this in this Sichuan province, which is their biggest hog-producing province, and then Hubei and Yunnan. And they've clamped down. They won't allow any live hogs to move from one province to another. It's kind of like the COVID-19 of hogs, this Asian swine flu. And the problem is that birds, you have to wear medical protective equipment, kind of like in a hospital, to be in these hog factories. But birds and, other rodents and stuff will get in there, carry the disease outside, and it's very hard to contain. And the country as big as China, you can imagine the challenge. But that, I think, is part of the contributing weakness in the meal. And, the La Nina weakened over January and February, and the moisture has improved down in South America. Now, we're still expecting that they'll see less of a crop than last year. And, then the other thing in this country, we've got acreage estimates out by these different private forecasters. The big report, your guys are always wondering what the big report is. The big report is March 31st. Mm-hmm. That's the acreage report. The Fed, way back in January, I told you that in February, the USDA always has the Agricultural Outlook Forum at the end of February, and that was what started to put these high acres in, and now the private forecasters are making their estimates of what it'll be on the 31st. But that's probably going to make us into a trading range in the chop. Excuse me. And then the key thing will be, do we get the crop planted and then does it grow? Well, the insurance rates for corn and beans are set based on the February average price, and they're basically, the corn, you're talking about 20+% above the previous year, so motivation to plant, it's very profitable. And beans, it's almost 30% above the previous year's insurance rate, so it's very, very profitable to plant. But then we're still going to have to grow these crops. Once we get them in the ground, we're still going to have to grow them, and that's when it's going to get volatile. But for now, it looks like it's probably a trading range. Watch them for this March 31st. And by the way, the additional acres we plant this year are acres that were prevent planted last year or are less desirable land, so they won't give you the yield that your best acres will. So these are just things the market will work through. And then eventually we'll probably have a weather scare. We do every year. I don't see any reason we won't this year. take a look at some of the weather events we've had recently, like last weekend, the snowfall in Denver, as an example.
Yeah.
I mean, we had 3 inches last night here in Minnesota.
Wow.
And, yeah, it's going to be 58 degrees on Saturday. So, this volatility in the temperature and the moisture, sooner or later this year will give us some concerns, and that's when they'll light these grain markets up. But the sentiment is very positive right now, and whenever there are too many people on one side of the boat, you need to get the weight balanced and distributed, and that's what's happening.
Mm-hmm. Well, Earl, do you remember years ago, we've been knowing each other for almost 50 years, and years ago we used to hear the story that we were only 1 year away from famine in the world because of the crop here. If we have a bad crop in the United States, I guess Brazil's taken a little bit of that slack off, but if we lost our crop here, considering we export so much, is there still truth to that? If we had it would really be quite bad, wouldn't it, if we did have a crop failure in some year soon?
Oh, yeah, there's no question about that. And, basically what's happened is you look at the carryover as a percent of consumption. And when it gets below a certain percentage, your margin for error has just disappeared. And the margin for error in soybeans has disappeared. Now, we've got a lot of interesting things going on. We've got the stimulus thing. 65% of that $1.9 trillion is front-loaded in the first 6 months of the program. So between now and September, there's going to be basically $1.2 trillion thrown at the economy. That's like giving somebody a huge injection of adrenaline. And on top of that, then you're going to go against the base effect. Well, March and April of last year, we were shut down, so our GDP was nothing. And, comparing nothing against this, all of a sudden, this big injection, it's going to make for very interesting markets in the financial sector, too.
Wow, I know. It's just really, we live in interesting times, as the old Chinese curse. Rich, we have a question from one of our listeners about this hog market. It's way up here. You called the bottom of that along with Mr. Z about 1.5 years ago when it was trading under cost. How does the hog market set now as far as supply demand?
Well, the hog production in the second quarter will be the lowest we'll have for the year. That's number one. And number two, you have the Asian swine flu thing in China. Well, maybe China will buy a little bit more. China and the U.S. are meeting in Alaska tomorrow, I think. And they bought some corn yesterday. But I think with all that $1.2 trillion thrown at the markets and thrown at people to spend in the next 6 months, you might see awfully good demand for pork. And so pork could very likely remain strong. I think that's why you're seeing these markets that they had this kind of vertical, and maybe they're going to correct a little, but the cash market's strong, and there's reopening effects. I just think you're going to see more people eating out, and with the new checks that they're going to have in their bank account, eating more.
Yeah. Hey, listen, Rich, I know you're busy, but thanks for joining us. We'll have you on again soon. Thank you very much, buddy.
All right. Thanks.
Be safe.
Take care.
You bet.
Bye-bye.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Albertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted a chart of the April hogs while Rich and I were talking, the ones we put in the newsletter over the weekend, and we were suggesting there's a possibility of a 3 drive to a top pattern happening at hogs. And then after we finished that, I pushed up the actual hog chart today. We were up sharply today. We hit $93 a pound in the live hogs, and we're trading at 92.77. Now, that is a big gap up, so, there's probably some type of news out there that's making it go up. So if you have a 3 drive to a stop, 3 drive to a top pattern there, you certainly have to risk a certain amount. So don't risk more than a penny if you're doing that trade. And frankly, the easiest way to do it is to wait till it breaks. In other words, sell. If it goes down today, you have really great news. And if it doesn't move up on great news, you know exactly where your handle is. We'll follow this tomorrow just to see what happens. So we'll keep a close eye on that, of course, to make sure that we're looking at what we're supposed to be looking at. Okay, now let's move on to numbers, folks. I do these. Let's get the DAX up here first, just because I had a question from someone in the DAX, and I'll get this up here. You'll see here that this is a daily chart, folks, and we have the big ABCD. We have the big 1.618 expansion. We've been here 1, 2, 3, 4, 5 days. At this level. Now, this could be accumulation and it could be support resistance. I don't know yet because it hasn't started to back off. One of the factors that I was looking at in the charts that we were looking at this week was the fact that the Dow Jones should have some pretty strong resistance at 32,800. We went about 80 points, maybe 90 points above that, and now we're down a little bit below it. But we're seeing great rotation. This is the thing that is really interesting, is the fact that we've got this rotation that really looks quite interesting. And I'm not sure that it's going to mean anything, but the one that the leader of the pack for this whole thing has been the NASDAQ, and I have posted. I put it in the newsletter here of the head and shoulders pattern. If you'll see the blue line there where the shoulder is, you have to raise the shoulder a little bit because we did get up to 13. Oh dear, what's calling it? That's I don't know who that is. And 13, we did get up to 13,320 or something. That completes that. But the right shoulder is still far lower than the left shoulder. And the time is correct, too. So that may be a head and shoulders pattern in the NASDAQ. I don't know. But that's one of the patterns that they use in the Andrew Lowe's book, The Non-Random Walk Down Wall Street, is because people use triple tops, triple bottoms, double tops, double bottoms, and head and shoulders patterns as part of the sum of the factors that they even cup and handles. All of those have mathematical sequences that must be fulfilled. And in a head and shoulders pattern, your left shoulder must be higher than your right shoulder, like it is here. And the time difference between the shoulders and the head and the shoulders have to be equal, and they have to be at a certain level. And those levels are related to the Fibonacci levels. They're all related to fractals, and fractals is why the ABCD pattern works so great. It's a way of breaking the market down into very small segments. And so I think it's important that we sort of remember that. Now, as we move on, talking about the stock market, we've been up for quite some time now, since 2009, March the 5th. Sometime in the future, we're going to have a pretty severe correction. When that's going to be, I don't know. But it's going to give us some ideas of where we're going to be. Now, we made an all-time high in the S&P today by quite a bit. We hit 3970. As you recall, we were looking for a maximum of around 3950, based on that Andrews line. And, of course, we've gone above that a little bit. But, the difference between 3950 and 3970 is 20 handles, and that's not very much when you're talking about a handle that's 3900. So we might be close, we might not. I don't know. All I know is that some of these other things are acting pretty well, and I think it's important. One of our listeners asked me to explain why the soybean oil is so strong, whereas the soybean meal has been so weak. The reason is the soybean is composed of two components. 80% of it is meal, 20% of it is basically the hold on one sec. 20% of it is the oil itself. And so when you have that, then you know exactly where you are as far as the product. We know that, let's just get the soybean oil up here so we'll be able to see it, and then you can make your own determination of what we're watching here. Because you see here, the soybean oil is basically worldwide cooking oil. This is what, and believe me, everybody in Asia uses this stuff tons and tons at a time. Maybe not so much here. Of course, in Tucson, they use lard. Believe it or not, folks, lard's a big product here in town. Anyway, you'll see here that this May soybean oil has just been absolutely straight up. And that's because they've been crushing for the oil and not for the meal. And so meal goes down $7,000 and oil goes up $3,000. And so that spread gets way out of line. When that corrects, it will start to be moving. Yes, Mr. Z saying that it's being the reason part of the bean oil is so strong is because the palm oil in Southeast Asia was decimated. Crop was pretty bad there. So this is one of the reasons why I am really starting to focus on this coming year. I spent a great deal of time over the weekend talking to Rich about this, and he said the real key to this will probably be in the new crop soybeans and the new crop beans and the new crop wheat, and to watch them very closely here, because if we have any slight variation in weather in this coming year, it's going to cause these markets to go nuts. And remember, we've seen beans at $18 before. And beans have a situation where they're really what is the name? What was the guy? Maybe you'd help me out. What was his name? Galbraith. Dr. Galbraith used to come to Indiana, and he would tell us that. Let me see. Hold it, Mr. Z's asking me to bring up the chart for the November beans of next year. So give me a second, and I can do that. So hold on one second here, boys and girls. I've got a couple of really good things going on here, and I don't want to screw them up. Hold on just a second here. We got to get that soybean baby up here, and here she comes. We'll be ready. Bear with me here, folks. Yeah, we're almost ready here. We're right up in a big zone here where we should be. Hold on, this is it, and we'll get it up here. So I have a hard time buying it up in this level. John, there's a phrase about soybeans that he said, and I can't remember it right now. I'm having a senior moment, but this is the bean chart. You can see we're up to a 1.618, a 1.26618 expansions. We've come off that by about 35 cents. We're looking for a retracement in here. And actually a really beautiful ABCD here over the next couple of weeks or even months, if it takes that long, that we want to be able to look at it. The key level, as you can see here, is marked as the 382, which would be $11 a bushel, and that means they would be on $1.50 a bushel, which is $7,500, and that would hurt a lot of people that are long. And whether it's going to stay that way or not, we really don't know. And by the way, Mr. Z, we appreciate everything you did for us here in the room. He has got these folks long, folks, and they have been riding the cowboy's tail for a long time. So we want to thank you, Mr. Z. You do great work in there, and your pinpoint accuracy has been really helpful. We're going to take a break here, 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking about the grain markets and possibility of some big things happening out in the future. You know, that's going to be in the future, so we want to pay close attention to that. I had several emails about the fact that the S&P has made new highs. Like I mentioned before, you know, based on the level we're looking at around 39.40, and the fact that we went to 39.70, that's only 30 points. You divide 30 into 3,900 and 39.70, you're going to realize that that's a very, very small number. It is about 1%. So we could be 1 or 2% off if I'm right. And it, you know, this is it today. I mean, if it makes new highs tomorrow on some of these things, and you know, you certainly got to stand aside and see how things come together. So that's really what we're paying attention to here this morning, and we'll see whether that makes much sense to you or not. But, you know, these numbers have a great deal of importance from my perspective because of the fact that, I'll put a couple of these up here just to show you why I think they're important. And believe me, that is this is what I'm looking at, but I'm eventually going to see. Hold on one second. I'll do the bonds here in just a second. I've had people banging the door here for the bonds, and they're asking me about Bitcoin and some of the other things here. Where is that chart that I want? There's the one I wanted to show you here. Okay, here is the number in that Dow Jones Industrial Average that I was looking at. And as you can see here, that was 32,778. If you look at the right there where the little blue things are, it says 32,894. Just for kicks and giggles, you know, defy human nature and do the work yourself. And go look at the Dow Jones and see what the high of the Dow Jones has been so far. Whether that means anything or not, you know, who knows, but just like everything else. Now, the Treasury bonds are going to have some type of a bottom down in here, folks. When and how and if, I'm not even sure. But this is the long-term weekly chart in the bonds. You'll notice that we had the ABCD from 2019 into the high, into March of 2020, and that was measured to 188. The market went to 192. Now here again, that's a very small percentage, and then you'll notice that we've been in a bear market for exactly 1 year. How about that? That's maybe means something, but we're down here below the 61% retracement. We're trading right at the 155 level. That level came in at 156. We're seeing an absolute decimation of the TLT. So, you know, sometime it'll have a bottom, but this time, folks, this time will probably be different because this will probably be a rally in a bear market. Because we're in a bear market, there's no question about it. You know, interest rates have been rising. I mean, not to the, you know, not into the some of this other stuff like mortgages and stuff, but even mortgages are starting to rally. But interest rates are rallying, and so that Mr. Marshall would like to add about crude oil. The crude oil, just a second, Marshall. I have a interesting chart here for crude oil. I think we would have an interesting chart for Marshall. And we'll be seeing you soon, I guess. Huh, Marshall? You'll be getting the old airplane tickets and coming down to the old Pueblo to visit the old cowboy. That'll be good to see you. Anyway, this is what we're looking at. We had a 61% retracement there at 66 1/4. And now I believe we're heading down to about 62 1/2. That's about 2 handles from where we are right now. You can see again, there's the 3 drive to a top pattern that occurred there on March the 7th. Again, just like in Andrew Lowe's book, you have to have some symmetry, and we do have symmetry between highs and lows there. And that's why you want to be able to, you know, mark it that way. You're driving? Are you kidding me? Wow, that's a long drive, Bubba. Okay, well, drive carefully, my friend. We look forward to seeing you. Guadalajara is waiting for us, that's for sure. Those of you that have visited us here in Tucson, we have an incredible old, I mean really old, 90-year-old restaurant called Guadalajara's. There's 3 locations here in southern Arizona, and we have the original one here in Tucson, and it is mom and pop stuff, but golly, is it good, and it is flat out packed. I mean, you'd never know there was anything wrong with the restaurant business at Guadalajara's because every table is taken, and the safe distancing is you don't fall down. So far nobody's died yet, but things are getting better here in Tucson. Yesterday we had to do our grocery shopping, and it was crowded everywhere. everywhere, all the parking lots in the supermarkets and the strip malls and stuff were absolutely packed. So I think that might be an indication that maybe this thing is bearing down. I had my first shot. I get my second shot on March the 28th, so we'll be able to look at that anyway. All right, if we have any questions. Al has just told me that the line is backed up right now, but if they do have any questions, it's 877-927-6648. Yes, Pinnacle. Bob was asking, do they still have Pinnacle Peak Steakhouse in Tucson, Arizona? Yes, they do. And, Al just told me a line just popped open if you want to come in. 877-927-6648. There's a steakhouse here in Tucson called Pinnacle Peaks. It's been there since, I think, 1927, 28, something like that. And this is when the businessmen used to go there, and in the evenings they would be wearing ties. Well, they started a custom of cutting the person's tie off and then tacking it up on the wall. And if you ever go in there, you'll see thousands of ties from every part of the world. But anyway, it's a fun place to go and watch and everything. So it's really interesting to see how different traditions are. But on a steakhouse, between scale of 1 to 10, it's basically about a 5.6. We've got a couple of eight level steakhouses here, but that one's a little bit off the beaten path. Someone's asked to talk to us about copper a little bit. Now, copper has been behind a little bit here in this. Notice we had that 135 pattern, and we backed off about 20 cents. We got down to the 3.99, and now we backed up around this 4.16 level. I haven't checked it today, but I'll be surprised if the copper gets above 4.20 on this run, because it's starting to show signs of distribution up in here. But if we get copper above that 4.20 level, someone check it for me, please. GDX, we can do GDX, not a problem for you, Bob. But I can check copper myself. So just give me a second here. We're going to get this chart up for Bob for the GDX, and we want to get that up. Hold on 1 second here. We'll get up here and take a quick look at it. 1 second here. Oh, where are we at here? Okay, all righty. Let's get the GDX. It starts with a G, right, Bob? GDX. There it is. There we go. Well, that's had a pretty good move here. There we go. Well, we came right off of that number, that's for sure. Then we come 10% off that number. All right, let's take a look here. Here's the GDX. This is what told us that we're looking at a pretty nice move in gold. We were up. We hit 73.40 today, folks, and now we're trading around 17.40 to 17.26. We still think we're going to be going a lot higher here. We're up about 8 days now in the GDX. We made a slightly higher high than yesterday, a little bit lower, so we might get a correction in here. But I believe any correction in the gold will be not more than $38, in my opinion. So if you take okay, we'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, boys and girls, we're going to take a little trip down memory lane here, and I wanted to talking about the 3 drive to a top and 3 drive to a bottom pattern. Folks, you know, this is one of my favorite patterns, and because it gives you everything that you can possibly ask for. Now, I'm going to go back here to 2000 in March of this year, when we were, let's get this up here. You can see on the 23rd of March back here, we were making a perfect ABC. This was last year, folks, 2000 is what I'm talking about. March of 2000, when the pandemic looked like it was going to kill the world. We had a 3 drive to a top pattern. This bottom pattern, as you can see, it's absolutely perfect. Count the number of bars down. The ABCD is perfect. The ratio, the first one is 1.27 or 1.37, not much difference. And the other is 1.618. And then look what we gap up on Monday, and away we go. That was the day that Larry Williams came out and gave the strongest buy signal he said he'd ever seen. And that was based on the contrarian stuff that was going on in the market, that the end of the world was in sight. You couldn't see it, but it would do you with the edge of town. So remember, these things are good for risk control is what they're for. They have a predictive capability, but their real beauty is when you use them for risk control. That's the whole key. It's about how much money you don't lose. And using Warren Buffett's analogies of his rules is, number 1, don't lose money. Number 2, don't break rule number 1. Well, you're going to have to take losses, but keep them small. That's the difference usually between most people and others, is that you have to keep them small, and that's the main thing that you want to try to remember looking at some of these things. Now, I have another question. Someone asked me about the New York Stock Exchange Index. We want to get this up here and take a look at it. You'll be able to see here that we've completed the ABCD from March all the way up into June of last year. We had a 38% pullback. That measures up to these levels right here. And as you can see here, we are, as of Sunday night, we were spot on. We were a little bit higher in the New York Stock Exchange Index yesterday, but this is a weekly chart, folks. You'll see that 1.618 expansion is from the high way back in February of 2018. That's a 2-year swing, so you got to give it a little bit leeway if in fact it works. I don't know if it works. All I know is the risk on these is relatively small at that point. So we got copper at 407. Thank you, Mr. Z. I didn't think it was going to get much higher because of that pattern that was there. A lot of resistance at the 416 level, being the 61% retracement of the whole move. But those are just numbers. That's all they are. Little by little, dibble in the middle. That's what you got to try to do. We have a guest coming on. Oh, what is that, Friday? Oh, I'm not sure. Hopefully we're going to have Stan Harley on Friday, but I'll have to give it a little wiggle here to see if I can get him on again and see if we can. I'm working on getting Larry Williams on. He's here in the States right now. He's back from his Caribbean hideout down there in St. Croix, and he's up in Montana, up there in Kalispell, doing his ice fishing, and his wife, lovely wife, the model Lucille, is actually a skier. She's a downhill skier, so they're having some fun up in there. Larry says his days of skiing are over because he's afraid of breaking something and not making it through the hospital. So we'll see. I'm the same thing. You got to be careful when you reach that 8th furlong pole, folks. You know, don't get to do your slam dunking anymore. Oh, I missed that so terribly. Oh, dear, let's move on to something that I really understand. I'm not even sure I understand anything. Let's take a look at one of the FANG stocks that I think is, you got to watch this one, folks, because if it ever happens, it's going to be the biggest signal to, hold here 1 second here to get up here. Lorraine, you're right, Jerome. Thank you very much. It's Lorraine, not Lucille. If you look up here, this is the Google. You'll notice here that we have been here for a solid month in a box like this with a gap up. Boy, you don't see that very often. Folks, that is either major distribution or major accumulation. And I am betting on distribution. And what you want to do is you want to watch Google. I don't know where it's trading today, but if Google closes somewhere around the 2,000 level in the next day or so, and right on that level, you don't want it to go below the box. You just want it to close right at the box. And what you would do is on that day, right near the close, you would buy puts. And if it doesn't, if it opens slightly higher, even unchanged, you're going to have to get out right away. But if it gaps down, you hit the slot machine. You hit those 777. So watch this in the Google. Would someone tell me where the Google's trading right now? Because that the key level is 2,000. I don't know if it's going to where it's trading. I don't even do that trade. I'm just saying that's the type of trade that you would look for because you have the maximum exposure for profit and the smallest exposure for risk. Ordinarily, you never want to buy a put or buy a call. It's 2086 or 86 bucks away. The key level to look at now is to watch it at around 2010 to 2000 even. You want it to close right in that red box area, and then on that day, you'd like to see it is Louise. I thought that was. Thank you, Jerome. I thought maybe the old gray matter was slipping. No, it is Louise. Yeah, she's a sweetheart. We were in Hong Kong together many years ago when they first got married, and I was going out for a walk, and it was real early in the morning, and she was on the thing, and also Renee Russo, the actress, from he's been Tin Cup and all the others she's been in. Well, she was getting ready to go for a walk too, and we were chatting, and I told her what a big fan I was of her and everything. She said, "Oh, that's great." So we went for a little walk around the park and stuff, but that was pretty cool. What was interesting is Louise put her in second place. She's really a knockout. So, but they were very, very nice, and just it was a real treat here. Anyway, let's move on here to talk about something that may or may not. Lethal Weapon. Thank you very much, Marshall. You're the best. Yeah, Lethal Weapon. Okay, there is another one here I wanted to show you that has not been acting very well, and that is the Netflix. Let's get this up here and take a quick look at this. I think we're rallying today, but if we ever get Netflix below $500 a share, folks, that is not going to look very good. That would be a very, very negative sign on Netflix to go below $500 a share. I think that would be one that's interesting. And another one that is not acting very well at all, and this is related to these numbers that what do you see with Apple? Just a second. I'll bring Apple up, Bob. But you'll see here, we've broken down below the 78% level. Now we've rallied back. We had a head and shoulders pattern. Again, you can see the right shoulder much lower than the left shoulder. The timing is actually pretty good. And now we'll go to Mr. Appel, who's down by the well. Hold on just a second here. And I believe here we have hit some major areas. Now I don't know where the Apple is right now, but Shut the front door, boys and girls. Give me a second here. I'm clicking the wrong buttons. Too much pressure. All right, give me 1 second here. Okay, here is Mr. Appel. We've had 382 retracements ever since the year started back on January 21st. You can see we made a 38% retracement. I will be surprised if Apple gets above 127. I don't know where it is, but it's okay. It's 125 now. I'll be surprised if it gets above 127, but I'm surprised a lot. That will be a Gartley pattern, and it will also be a 382 retracement. So above 127, what's the high of the day, Bob? Above 127.80, I believe, is the actual number. So watch that tomorrow. That'll be a really interesting one to pay attention to. Okay, I think we got a break coming up. Yep, we do. I don't hear the music, but there it is.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks, just for kicks and giggles, I'm going to post a chart here, 15-minute chart of the bonds over the last 7 trading days. You'll notice here that we had that high up at 158, and we broke down all the way to 155, 3 handles. And over the last 3 days, we've tried to rally to the 382. We missed it by 2 ticks today, folks. 156.22 was the number. We got to 156.20. We're now down to a full handle under it, and it looks like we could be looking at another ABCD to the downside, and that's going to be a bad one because you're going to break out 150, and that would not be happy to the bondholders. But don't worry about it. The Fed will come in and bail everybody out. No problem at all. That's the main thing. So let's remind ourselves of that. We are going to have the Shane Man on, hopefully on tomorrow, on Wednesday or Thursday. One of those 2 days, we will have Shane Schmullian on at the Wolf Trader, and then hopefully we're going to have Stan Harley of the Harley Stock Market Letter on, and we will keep a close eye on him. He's been very, very bullish, and his day that we had on the March 11th, instead of being a high, or instead of being a low, must have been a high, but we'll ask Stan that when we have him on the air on Friday. So watch these bonds, folks, because if they go below that 155 level, they're looking at 149, and especially after hitting that 382 retracement this morning by a near miss, that would be telling. Now, on the other hand, take it from the devil's advocate here. If the market goes back above that 156 now, and have to get to about, we'll say 157, then you're looking at a pretty good rally in these things. We will have a rally in bonds, but I don't know if it's going to be in my lifetime or not. Where they tried to feed us tapioca, and also the fact that we were going to have negative interest rates, that never happened. So do something for me, folks. Live every day in an attitude of gratitude, and may God bless. And please do something for your neighbors, because they all need their help. Catch you on the flip side, folks.